Welcome back to Yahoo Finance's All Markets Summit, sponsored in part by Grayscale. As the crypto world faces volatility, it continues to flourish with institutional adoption and real-life use cases. Joining us now to discuss the crypto landscape beyond just where the market price of Bitcoin happens to be sitting, we've got Crypto Council for Innovation CEO Sheila Warren and Apollo Head of Digital Investments and Assets, Christine Moy, along with Yahoo Finance's David Hollerith. Great to have you all here with us for this conversation. First and foremost, just to tee up where the conversation is going to go, we should acknowledge that we are in a crypto winter right now. And David, I'll kick things over to you to really kind of set the scene, especially as we've seen kind of this deceleration or this decline in some of the crypto prices right now, and where that kind of influences some of the investment decisions going forward too.
Yeah, Brad, my first thought is sort of just to tee it up. You know, in the second quarter, we saw crypto assets fall first under macro conditions, and then a lot of sort of idiosyncratic sort of issues with the asset class, insolvencies, all that. And you know, that was obviously something unique. Since then, cryptocurrencies have mainly stayed fairly flat compared to other assets like equities. And so I think that's a good place just to start, is just to turn it over to each of the panelists, Sheila and Christine, and just sort of ask you what's different about sort of this crypto bear market compared to previous cycles.
Sheila, we'll go to you first on that.
Sure. Thanks so much. You know, I think the last time, 27 to 18, there was still this question: is crypto as a class? It really was kind of the Bitcoin or blockchain days. And is this just a flash in the pan? Is it all going to vanish and just evaporate? And this time around, I think there is a sense of the stickiness, the inevitability of this, not just as an asset class, but as a technology that's going to have tremendous impact, I think, across a broader variety of industry ecosystems and subsets than just financial services.
Christine, same question to you. What's different between this crypto winter and past crypto winters that we've seen?
Yeah, sure. I mean, as Sheila mentioned, in the last crypto winter, there was a lot in development, but there hadn't been any mass uptake or adoption. Like, people had bought some Bitcoin and Ethereum through like crypto exchanges. Maybe a very small set of people started participating in token sales, or what were called ICOs. But generally, even in the enterprises, when we were using blockchain technology, it was still in pilot or prototype stage. Now, in the last bull cycle that we just saw, going into today's crypto winter, we've seen mass adoption in a variety of different forms. So, you know, we saw, for example, a number of technological enthusiasts and financial enthusiasts participating in yield farming through the DeFi summer of 2021. We saw a long tail of creatives and non-technical consumers participate in the NFT markets in 2022. And then across this whole time, a broader adoption of stablecoins for payments and regular business use cases, like just trying to pay like my employees globally. Now the result of this is that a broader audience has become more informed around this technology. A number of those use cases required being able to set up a self-custody wallet, a self-custody crypto wallet. And so, you know, basically what we're dealing with now is a more kind of invested audience, and intellectually invested in terms of like having done the work to get set up with this ecosystem. The last crypto cycle was really brutal and long. And for those that managed to survive, they went on to become the biggest companies and protocols in our industry. And so I would say that in this crypto cycle, or in the last bull cycle, you know, many of the investors and the companies raised what sounded like egregious amount of money at the time, but basically building a war chest to weather this particular winter. So, you know, basically, whilst we do see this winter being severe and long, because, you know, before we didn't even have the broader macroeconomic uncertainty around inflation and potential recession, I would say that the industry is a little bit better prepared. And additionally, institutions, enterprises are continuing to build in this space. Just recently announced Bank of New York Mellon is now offering Bitcoin custody as just one example.
Okay, so I want to take a brief step back, because there's a lot to unpack there, right? For better and for what we still need to work through too. But first, perhaps just defining, for the sake of the conversation, Web3. This is a more decentralized internet. This is an internet that's running on, or a connection point that's running on blockchain technology. This is new for a lot of people. This is also new for the way that investors like yourself are also evaluating some of these companies, right, Christine? And so with that in mind, there's the traditional thought of what's the path to profitability for some of those companies? And is that path to profitability hindered because you don't necessarily have the immediate return, and it's a much further looking out type of investment that you're really evaluating here? How does that really influence some of your investment thesis around Web3?
Sure. Just taking a step back, a lot of buzzwords in the space. We've got crypto, blockchain, digital assets, NFTs, DeFi, Web3. And so for someone who's not following the space, it can be quite intimidating. However, I like to just explain what is happening right now as a multi-year technology shift that is accelerating financial innovation. It's driving new investor behaviors, and it's creating new financial markets infrastructure that has already begun to start impacting payments, capital formation, lending and borrowing, and asset management, and then a long tail of other things, including culture. Now, we blockchain nerds that are in the industry like to think of what's being built as the internet of value. Now, the internet that most of all of you know and love, we think of as the internet of information, basically the set of technological protocols that made it possible to make 24/7, 365 distribution and exchange of information around the globe. The democratization of content and information creation and distribution through platforms like social media, where individuals were empowered to become platforms empowered by this technology, and information gatekeepers or incumbents were challenged and forced to evolve. Now, if you take that sort of framework and you apply it to not information, but now technology impacting value and value transfer and value creation, you can kind of see where we're going with this now, like in this new internet of value. Basically now that digital value transfer can be 24/7, 365 and peer-to-peer. We're seeing that now with the advent of stablecoins, or how there's been a broader democratization of value creation and distribution. We've seen that with the fits and spurts of capital formation through token sales, as an example, or how financial services at large are being unbundled into financial primitives, more jargon, but basically turned into tech microservices, basically libraries of code to do things that typically banks and financial institutions would do. And NFTs, broadly in experimentation in creating bespoke digital assets with the new ability to ascribe value to something that previously would just have been just another copy of a JPEG. But now, because we're able to track digital scarcity and provenance with this new Web3 technology set, we're able to ascribe cultural and historic value to digital things. And so, with this large technology shift that's happening, institutions like Apollo, and by the way, Apollo is a $500 billion asset manager with over a 30-year track record investing and participating in public and private equities, fixed income, credit, retirement services, and insurance. We believe in a world where this technology shift will basically impact existing financial market infrastructure and business models as more real world assets and real world applications emerge with this technology. Now, to be clear, it's not going to be a lift and drop of existing markets onto blockchain technology. I think that has all been tried like in the previous years, of the last half decade. That didn't really necessarily work, nor is there really a business case to do that. And it won't be magic internet money that ignores the financial realities of, appropriate risk and return. I think that the recent crypto markets unwind and, market idiosyncrasies we've seen have proven that. But it's going to be a unique, never before seen intersection of crypto native new product and market development that has been grounded in the financial realities of risk and return relative to the broader tradable markets. And powered by automation and composability we've seen through smart contracts and digital ledgers. So at least here at Apollo, we're focused on being real world practitioners of Web3 technology, rolling up our sleeves, actually testing out the blockchain protocols, building on smart contracts, helping to build new products to help support and shape this industry as this technology shift is happening. Right. And then additionally, we've started investing across the technology stack, focused on identifying ambitious founders that can benefit from our markets expertise across those markets and our scale. And so it's been an incredible entry point for us at Apollo, since we're just starting with a bunch of dry powder in this space in this winter cycle.
Certainly. I mean, look, if you find any of those founders that can help me turn any of my old JPEGs that I created in Paint into something valuable in the future too. I know this is just a small part of the broader NFT landscape and broader crypto and blockchain landscape, but I would certainly appreciate that as well.
Working on it.
Yeah. David, I'll turn it over to you.
Well, yeah, I mean, Christine, to your point, I mean, you've been working in the space for a long time, and you're deeply enmeshed, and it sounds like looking at some of the cutting edge sides of the technology. But, Sheila, if we turn to, Washington, the story of regulation, at least in the U.S., but I think you could say sort of more broadly, is like very unclear. And, we've seen President Biden release his executive order on cryptocurrency, and we're starting to see federal agencies respond with reports coming out. And I was sort of curious, how has the conversation in Washington around cryptocurrencies changed over the last 6 months? I mean, it's often sort of a topic of sort of what is holding back maybe the asset class from getting more adoption.
Well, it's changed a lot. And I think to the point you're making, David, it's not just about Washington. We're seeing a lot of activity happening all around the world from the regulatory space. I think the thing to note is that technology is moving so fast. Christine did an acronym dump on us earlier, right? You've got DeFi, you've got NFTs, you've got DAOs, you've got so many of these concepts that are still being formed. The market hasn't yet weighed in on the direction that these things should go or will go. At the same time, you've got regulators scrambling, I think that's the right word, to keep up and provide some clarity around this, both to help the industry shape and build on more solid foundation, but also to help consumers make sense of what all of this means. So we're seeing activity out of Europe, we're seeing activity in South Korea, Australia, the UK, India, Japan, I mean, really all over the world. United States, in Washington, tremendous activity, both federal and the state level as well. And I think that the thing right now, we've got two very active bills that are being discussed. One focusing on kind of which agency ought to have the stronger hand or a hand at all in regulating this space. The other on stablecoins specifically, thinking about what should happen in that environment. How do all these things play together? Will there be a digital dollar in the U.S. like the digital euro that Christine Lagarde announced earlier this year? It's complicated, and so I think the next 6 months are going to have us in an even different place. We're going into the midterms now. There'll be a potential shakeup and how the voices that are the most prominent voices and the positions that they hold on various committees. But all I can say for now is it's a space to watch. It's critically important to the entire ecosystem. And the decisions made, I think, over the next 6 months, certainly over the next year, are going to play an outsized role, I would think, in the development and the way that this technology ultimately lands with consumers.
So Sheila, with that in mind, and perhaps it's trivial of me to ask to kind of apply the rule of threes to this, but if I were to ask, what are three big things that regulators need to get right when they're thinking about and working through what crypto legislation should look like, especially here in the U.S.? What would those three things be?
Oh, gosh, it's so hard to pick, right? So here's three things I think that are important to keep in mind. And one is, this is global. Nobody's waiting for the United States to act or not act, as the case may be. And so while there is some influence, the U.S. still has significant influence over these markets, that's not going to last forever. We are seeing MiCA, which is the big comprehensive legislation that's landed in Europe, start to be implemented. That's going to have huge implications potentially on how builders build, how consumers engage with this technology and offerings. The second thing I would say it's really important to note is, despite the attention on the price, and this entire framing of this conversation is about how that's not the most important or only thing, this is about a lot more than just financial services and products. This really is about building a new version of the internet, a decentralized internet. Christine laid out what Web3, what that concept means. So thinking about how this will work in spaces like data, spaces like the creative economy, all of that is really, really important. So global frame, more than financial services and products. And the third thing I would say is that the details really, really matter. So I think a lot of folks tend to think of regulation as just kind of providing this very broad, playbook, but actually there's a lot of nuance and detail, and the conversations are happening live right now. And a lot of that is going to be critically important. So meeting with technologists, making sure that there's understanding about what's actually happening in the trajectory, what's moving forward, is also just it's just critical and crucial here, even more than it's ever been before, I'd say, in other industries.
So Christine, hearing all that, what's the timetable for Web3 to be part of an everyday person's life? I mean, if we're going to transact and get our coffee, or whether we're going through, a car transaction, what is the timetable that we have to look out towards?
Okay, that's a really good question. I mean, I guess the thing with technology evolution, it's one of these things where when you're in it, it rolls out like quite slowly and incrementally. But then in retrospect, it looks like it happened very fast. And so what I mean by that is, you mentioned I've been in the industry for over 6 years. And in those 6 years, I've seen the building blocks of blockchain protocols actually be created and get adopted, or, stable coins get created, or, the primitives around lending and borrowing via smart contracts, which later evolved into DeFi. All of these things started as very big ideas against a backdrop of a difficult reality. In fact, that it didn't exist. And also there was a lot of regulatory, stuff to navigate. But in the past 6 years, all of that has actually come to fruition. Ideas have come to life, and they've been used and actually tested with real money, and actually have had multiple teams around the world with different, levels of expertise around technology and financial markets and infrastructure, all contributing in open source code. So, it's moving fast, but moving fast and slow at the same time. In terms of, and so, I feel like we're just kind of at the stage where, the key building blocks of the infrastructure have been put in place, but now it's about the real world applications. And this is where, the real world assets that we're hyper focused on from Apollo's point of view, may start to emerge. But then additionally, a lot of work around user experience. Blockchain technology is actually back-end technology. And, if we do this right, Web3 doesn't become a noticeable part of our lives. It just sinks into the background. Yeah. It's just stuff that drives, the applications and our use cases. And in fact, it becomes a little bit boring.
Certainly.
And so, basically I would say in the next couple of years, we should see an acceleration now that the foundational pieces are in, and now it's more focused on what do people find compelling. I think NFTs were a glimpse of how a broader user base could be compelled with, use cases that were broadly cultural, and maybe less financial. I think there's just a small subset of us nerds that, are kind of building, really interested in, all of the hyper financialization overall. So right. I think the path to, broader adoption is probably something more fun, funny, mimetic.
Absolutely.
Well, that's
so the next few years, we'll see the acceleration.
Thank you.
But it'll be slow and fast at the same time.
Yeah. That's about all the time we have, so I think we'll cut it off there. I just was going to leave it for closing remarks. Sheila, what should we expect in the next quarter as far as regulation goes?
We only have about 30 seconds, Sheila.
Yeah, very, very active conversation. Very active conversation in the US, in Europe, and all over the world. Hopefully there'll be some, symmetry, or at least compatibility in what comes out of these different places, but maybe not. So it's just a place to watch for sure.
Crypto Council Head for Innovation CEO, Crypto Council for Innovation CEO, I should say, Sheila Warren, and Apollo Head of Digital Assets, Christine Moy, joining us here today. Thank you so much for the time and the conversation.